Yes. Previous week, we started chapter 8, reliance on the work of others. Reliance on the work of others. I mean, during audit, we need to use the work of others. We need to rely on the work of others. Who could be others? There could be expert, a person or organization having knowledge other than accounting and auditing. And we need to use his work to obtain sufficient appropriate audit evidence. During audit, we need to rely on the work of internal auditor. Why? Because he is also performing test of control substantive procedure. If we take his working paper, this can reduce our audit work, but not the audit responsibility. Relying on the work of internal auditor will reduce our audit work, but not the audit responsibility. That's why before placing reliance on his work, we need to see certain things. And up to what extent we should rely. So we should arrange a meeting at start of year to agree the work. During year, there should be separate meeting to assess his work, how we can assess his work. We need to re-perform some of his work based on sample. And we should compare our own performed work results with his results. If same, we should continue reliance. If our results and his results are different, we should not rely on him. We should perform our own work. During audit, we need to rely on the work of service organization. What is this service organization? Suppose we are auditing a client whose name is, say, ABC company. So our client name is ABC company. This means if we are auditing ABC company, we need to express opinion on the financial statements of ABC company. You know? How we can express opinion? By taking evidence. How we can take evidence? By applying audit procedures. And those procedures are test of control and substantive procedures. This means we need to perform audit procedures on financial records of ABC company. We need to perform audit procedure on financial records of ABC company. Financial records mean journal, ledger, trial balance, invoices, orders, dispatch note. These are the financial records that we need to check to take evidence, and then we will be able to express opinion. What happens here? This ABC company doesn't have their accounts department. So what they are doing, they have outsourced their accounting department, their accounting function to another accountancy firm. And that other accountancy firm will be called service organization that is providing services to our audit client. What kind of services? Accountancy services. This means who is preparing financial statements of ABC company? This is service organization. How they are preparing? They are taking all the data of ABC company in service organization. Service organization is preparing journal entries, they are preparing ledgers, they are preparing trial balance, and they are preparing financial statements of ABC company. This means the accounting records are not in ABC company, where the accounting records are in service organization, in any other accountancy firm to whom they have outsourced their accounting function. This means we, being auditor, need to perform audit procedure on records where not in our client business. We need to perform audit procedures on accounting records which are where in service organization. This means we need to go to service organization. we need to ask for record from service organization. We need to perform audit procedure on accounting records in service organization because they are preparing financial statements. This means ledger, trial balance, journal entries, where they are in service organization. So tax, any kind of a services, accounting service, either taxation services, either full financial statement services, or any part of financial statements. If it is outsourced to any service organization, this mean we need to rely on the work of service organization. And in that case, there are two types of auditor. One is called user auditor and other will be called service auditor. Where our client have outsourced their accounting function to any accountancy firm called service organization. This means we need to rely on the work of service organization. Before starting our auditing work, we, being auditor, obtain knowledge about controls in the system of producing financial statements. I mean, what are the controls in the system of producing financial statements? Mean the accounting system that is producing financial statements, whether there are any rules, policies, procedures, controls there or not. Mean whether qualified staff are there or not, whether they are keeping accounting records proper or not. These are the controls. So we need to take knowledge about controls. How we can obtain knowledge about controls? We, user auditor, will request the service organization auditor, that will be called service auditor. Please provide us knowledge about controls over the accounting system from where ABC company financial statements are going to produce. And when we need to obtain knowledge about controls, we will require type 1 assurance report. From whom? Service auditor. Who is requiring this report? User auditor, mean we. What will be in type 1 assurance report? Detail and a description about controls in service organization. Mean whether they are keeping proper records, whether there are qualified staff available, whether they are preparing financial statements based on the accounting records, whether they are following accounting standard, which for accounting standard they are following. All this knowledge will be provided to us by the service auditor. How? Through our report. That report will be called type 1 assurance report. That is only about controls. About controls. After having knowledge about controls, we need to check whether those controls are effective or not. How we can check effectiveness of control? Through test of control. Who will perform test of control? Service auditor on behalf of us. And after performing test of control, he will provide us another report that will be called type 2 assurance report. And what will be in type 2 assurance report? Detail about effectiveness of controls where in service organization. Or simply he will provide the working paper of test of control performed. And he will say, I have performed these test of control. These are their results. Now you can see whether controls are effective or not based on the results of test of control. Now I'm repeating it once again. During audit, we need to rely on the work of service organization. Who is a service organization? If suppose we are the auditor of our client ABC company, this means we need to express opinion on the financial statements of ABC company. How we can express opinion? By taking evidence. To take evidence, we need to perform audit procedures, test of control, substantive procedure. Before performing substantive procedure test of control, we need to obtain knowledge about controls in our client accounting system. So what's the issue here? This client ABC company doesn't have their accounting department in-house in the company. They have outsourced their accounting department to any accountancy firm. That accountancy firm will be called service organization. If our client has outsourced complete accounting, financial statement preparation, or any part of financial statements to outsource to any accounting firm, in that case, there will be two scenarios. First scenario, either we are having permission to perform procedures in a service organization because they are preparing financial statements, so they are keeping accounting records of our client. This means where the records kept, we need to perform procedure over there. So either we have a permission to go in service organization and perform procedures over accounting records to verify financial statements. But if suppose that service organization, that accountancy firm is our competitor firm, they are not allowing access to us to move over there and perform auditing procedures. In that case, we need to move our option two. What will be option two? That service organization's auditor called service auditor will help us, provide us some evidence regarding financial statements. What kind of evidence we required from service auditor? From service auditor, we required two assurance report. One is a type 1 assurance report and one is type 2 assurance report. Who is requiring these reports? User auditor mean we. From whom? Service auditor mean auditor of service organization or any representative of the service organization. When we need type 1 assurance report, when we want to know about controls in service organization. So we will require type 1 assurance report. What will be in the type 1 assurance report? Detail and description about controls in service organization. These are the controls. These are the policies that service organization follow in preparation of financial statements. They record journal entry first, then they prepare ledger, then they prepare trial balance, and through trial balance, they prepare financial statements. They are having this qualification staff, this experienced staff available. They are keeping records properly, and through those records, they are preparing financial statements. This means controls are there. If controls are there, we need to verify whether those controls are effective or not. How we can verify? Through test of control substantive procedure. And then we will ask service auditor, please provide us type 2 assurance report. What he will do, he will perform test of control substantive procedure, and he will provide us type 2 assurance report. What will be in the type 2 assurance report? Detail about effectiveness of control in service organization, or he will provide a working paper of procedures performed. These are the procedures, test of control, substantive procedure that I have performed. These are their results. You can see whether controls are effective or not. If there are controls in a service organization and controls are effective in service organization, this means we can say financial statements give to and fair view. If service organization either do not have controls or having control but controls are not effective, in that case, we will say financial statements do not give and fair view. Because the financial statements produced from which system, that system doesn't have controls or have control, but controls are not effective, mean financial statements are not true and fair. Mention experts in the expert is something different. Expert is a person who is having knowledge other than accounting and auditing. But expert is not mentioned in our working. Even about service organization, we will not mention in audit report that this work has been performed by service auditor. No. We will be responsible. That's why before placing reliance on the work of service auditor, we need to check his qualification, experience, reputation, application of standard in the work, membership of professional body. I mean, these things we must check of our service auditor as well. Who is a service auditor? Any other accountancy firm? Who are you? Accountancy firm? You can rely on any other accountancy firm. If you are not relying on your accountancy firm, your professional people, who will rely on you? Yeah. And the reports are controlled in the service organization, not in the client. Yeah, yeah. Because the financial statement preparation process is not in our client, it's in service organization. Yeah. So there should be two options. Either we have a permission to move towards service organization, check controls, perform procedures, and take knowledge about effectiveness of control. If we are not having permission, then their auditor will help us. And if both options doesn't work, in that case, there will be scope limitation. In that case, we will not be able to express opinion because we are not able to verify financial statement figures. Is that fine? So during audit, being auditor, we need to rely on the work of others. Who could be the others? Expert, for taking evidence, internal auditor, for performing some work through internal auditor to take evidence, or service auditor. Service organization means service auditor. Why? To take evidence. This chapter finish. Now moving towards how we can audit financial statements figures. Mean what is main audit? We will learn one by one each account balance, how we can audit a sales figure, how we can audit purchase, how we can audit expenses, how we can audit inventory, how we can audit income, how we can audit non-current assets, how we can audit a current asset cash at a bank, how we can audit receivables, how we can audit payables, how we can audit non-current liabilities, how we can audit share capital. Mean each account balance we try to learn how we can audit. Let's discuss about sales system first. What is the sales system? Let's discuss about it first. So we are going to discuss sales system. First, we need to understand what is a sales system, in how company record sales, what are the documents company prepared in a sales system. Then we will learn how to audit it. So let's discuss what is a sales system, normally that operate in different organization. Sale order. When company received order from the customer, they generate a document called sale order. When company receive order from customer, they generate a document called sale order. They keep this sale order document into company records because all the information relating to order mean what is the quantity, what is the price per unit, when we need to deliver goods to the customer, everything is written on this document. After receiving order, company need to dispatch goods to the customer. While sending goods to the customer, company generate a document called dispatch note. And company prepare two copies of dispatch note. One they keep in their record, two copies of dispatch note. They send both copies to the customer along with goods delivery. One copy customer will retain for his record. Other copy he signed and sent back to the company. And that signed copy of dispatch note we keep in our record because this is a proof customer have actually received the goods. That will be called GDN, goods dispatch note as well. And against GDN signed copy, we update our inventory record. Like this inventory has gone. Where we record the inventory in PIR. PIR stands for perpetual inventory record. Perpetual inventory record. In simple word, what is PIR? A register where inventory movement is recorded. So while receiving order from the customer, we generate a document sale order. While sending goods to the customer, we generate document dispatch note. And customer keep one copy of dispatch note in his record. Second, he signed and sent back to us, and that signed copy we keep in our record. And against that signed copy, we update the inventory movement where PIR, actual inventory record, mean a register where inventory movement is recorded. Inventory in out is recorded. After that, we will generate another document called sale invoice, mean bill for the customer. Again, we will produce two copies of sale invoice. One we will send to the customer, one we will keep in our record. This is a request for payment to the customer. Against sale invoice, we record the accounting entry in a sale day book. Books of primary entry. We are discussing about credit sale. So we'll record accounting entry in sale day book, receivable debit, sales credit. And against that sale day book accounting entry, we will update the ledger. Which ledger? Receivable ledger and sales account. And along with the sales, we will also update VAT account because we are receiving tax from the customer that we need to pay to the tax authority. So we will update the VAT account as well. Output VAT. And we record entry in control account. What is this control account? Suppose companies having 10 different customers. Receivable ledgers are the 10 different individual ledgers of each customer. What is control account? It is a combined account of all the receivables. It is a combined account of all the receivables. We will put entry into receivable individual ledger as well as the combined ledger called control account. Why we are posting twice? So that at the end of every month, we can compare both of these, like the balances of all the receivable account, we will total and we'll compare with control account. If the balance is the same, this means there is no posting error. If the balances are different, this means there is a posting error either in any receivable ledger, either in control account, so that we can rectify it. And to identify posting errors, we need to put entry in two ledgers, one individual ledger of receivable and one their combined ledger called control account. Say listing or debit, it goes to either receivable ledger or nominal. Obviously, nominal ledger are what? Impersonal ledger. Nominal mean impersonal ledger. What is the accounting entry of sale? Receivable debit, sales credit. So we need to record in receivable ledger as well as sale ledger. And in sale, we are collecting the tax that we need to pay to the tax authority. We will update the tax account. And we need to update the control account as well, the combined ledger of all the receivables. So in this manner, we have recorded the sale into the company. What document we have generated? Sale order, good dispatch note, entry into PIR, sale invoice, entry into day book, and then ledger updated. What will happen after that? We will receive cash from the customer. Against receipt, we need to record the receipt in a daily receipt list. Like these are the receiving we have received from the customer on this day. Against receipt, what is the accounting entry? Cash or bank debit if we are collecting a check, that bank debit if we are receiving cash, cash debit, receivable credit. So we will update the cash book as well as the receivable ledger. And when there is any entry in receivable ledger, we need to update the combined ledger of all receivables control account as well. Is it fine? The receipt we have received from the customer, we need to deposit into the bank promptly. And when we are depositing into the bank, we are recording in paying in book. What is paying in book? Deposit slips that we need to keep in record, like these receipts we have deposited into the book. And when the amount will go into our bank statement will be updated automatically. Mean this money has been coming into the bank. So this is the system of sale. Mean what system normally work in company for sales and cash collection against sales. Mean until here there is a sales system. Below this there is a cash receipt system. So what document we generate? Sale order, dispatch note, sale invoice, ledgers. Against receipt, we update the cash book as well as the ledger. And while depositing receipt into bank, we are updating a book called paying in book. And when money will be deposited into our bank account, our bank statement will be updated so that at every month end, we can compare this cash book and bank statement reconciliation to identify any differences. So this is the system. Now we should know about what are the controls in this system. I mean, what controls normally work in this system. What are the controls in this system, or what controls normally work in this system? While receiving order from the customer, what the company need to do? Company need to check credit worthiness of customer and stock availability. These two control must be there while receiving order. Credit worthiness of customer, company need to check. For existing customer, you need to check how much is the credit limit of this customer. Say its a credit limit is 500,000. If we have already sold 400,000 goods to this customer, so what's the remaining credit limit left? 100,000. So if the order is up to 100,000, this means this order is under his credit worthiness. If it's going beyond his limit, this means customer is not credit worthiness for this order. There could be chances of bad debts, mean we shouldn't accept the order. For new customer, we check credit worthiness. How? We check his credit rating from different credit rating agencies. Credit rating agencies mean different banks we can check. Or we can ask him, okay, send me your bank statement. Through bank statement, we will see if there are too many inflows, outflows. This means he is credit worthiness. We can accept order on credit. If customer credit worthiness is not okay, we shouldn't accept the order. Otherwise, there will be bad debts. So why we should check credit worthiness of customer? To avoid future bad debts, to make sure we are receiving order from credit worthy customers only. While receiving order, we need to check stock availability. If suppose customer is putting order for 90 units, we need to make sure whether we are having 90 units in our warehouse. If we haven't checked while receiving the order and while dispatching, we aware that there are 80 units while we have received order for 90. What you need to do for the remaining 10, you have to produce. And if production require more time, this means deliveries will be late. And in case of late delivery, customer might impose you claim for damages because his requirement is not met. That's why while receiving order, we need to make sure whether we are having that stock available in our warehouse or not. So sale order must be processed after checking credit worthiness of the customer and after checking stock availability. And this sale order is a document that we need to keep in our record. So to ensure completeness of recording of this document should be pre-numbered. This document should be pre-numbered. What is under pre-numbered? This document should be sequentially numbered. Mean there should be sequence-wise number on this document so that we can keep in our record. If the previous order number was 501, this order number should be 502. If there are no number, we cannot make sure which document we are keeping in record, having in record, and which is missing from the record. Through sequential number, we can trace which is missing. So there are three controls of sale order. Customer creditworthiness check should be performed. Stock availability check should be performed. And sale order must be pre-numbered for completeness of recording. Dispatch note is having different controls. What will be the controls? While preparing dispatch note, what we need to do, we need to first match the dispatch note with order to make sure the quantity that we have received order, we are going to send exact that quantity of goods to the customer. We are not sending less or more than order. So dispatch note should be matched with sale order to verify quantity. Dispatch note must have customer signature as proof. We will send two copies. One he will keep for his record. Second, he will sign and return back. And that signed copy is a proof that customer have received the goods. If there are no signs, customer can deny in future, I haven't received the goods. How you can justify you have sent the goods? You cannot justify. So must have customer signature as a proof. And this document also we're gonna keep in record. And to ensure completeness of recording, this document should also be pre-numbered. There should be sequence-wise number on this document as well so that we can ensure completeness of recording so we can identify any missing document from our record. Stock PIR is having one control. What is that control? PIR must be updated against physical count. What does that mean? On regular basis, say monthly basis, mean at the end of every month, the warehouse staff should count the inventory that is available in the warehouse. That is will be called physical count. And after counting, they have identified how many units we are having in the warehouse. They should match that quantity with the register, whether in the register record, the similar quantity is there. So that if there is any difference, they need to update the register. Because while receiving order, we are checking stock availability from where? PIR. And if PIR is showing different balance while companies are having physically different units, then there could be problem. So PIR must be updated against physical count, mean on monthly basis. After counting the inventory physical, you need to compare with PIR. If there is difference, PIR should be updated. Regarding sale invoice, there are some controls. What will be the controls on sale invoice? Number one, when you have prepared sale invoice, you should match with orders to check the price we agreed while receiving the order. We are charging exactly that price discount to the customer. Otherwise, there could be differences. You need to match the sale invoice with GDNs as well. For quantity check, the quantity we have submitted to the customer or the customer has received, we are charging exact that number of quantity in the bill. If you are charging more quantity or less quantity than you have delivered, there could be problem. That's why after preparing invoice, you need to match with order for pricing check. You need to match with the GDN for quantity check. Sale invoice created after sending the goods. If you have agreed with the customer, okay, you will pay within 30 days. So before 30 days, like on 20th, 25th days, you will send the invoice. Your amount is due. Pay until this date. And this invoice must have arithmetic check performed. What is arithmetic check? We need to check the calculation, recalculate the calculation. Like unit into price per unit is equal to gross sale less discount is equal to net sale. There is no calculation error involved. Otherwise, customers can deny the payment because he is considering different payment. You are saying through invoice different payment, but there is error in your invoice. It will affect your credibility as well. Like you have gone to any restaurant, you ordered 3 dishes, and at the end you call for the bill. In bill, they have charged 5 dishes, and if you haven't seen and paid the bill, that's lottery of restaurant. But if you have seen, oh my God, they are charging me 5 dishes, I ordered 3. So this will affect credibility of the restaurant. You will be in doubt. You will never go back to that restaurant because they are charging more than ordered. So that's why you should have performed arithmetic check on the invoices. And this invoice is a document that we need to keep in our record. So to make sure completeness of recording, this document should also be pre-numbered, means sequentially numbered for completeness. So what are the controls of sale order? Must have performed customer creditworthiness check, must have performed stock availability check, and must be pre-numbered for completeness of recording. Controls relating to dispatch note must be matched with order, must have customer signature as a proof, and must be pre-numbered. Controls relating to invoices must be matched with order for pricing check, must be matched with GDN for quantity check, must have arithmetic check performed for accuracy, and must be pre-numbered. And what is the control of PIR? PIR must be updated against physical count. What is the control relating to sale day book? Must be pre-numbered. What does that mean? While recording accounting entry in a journal, you must provide an invoice number in the reference column. Like this accounting entry is for 503 invoice. Next accounting entry will be for 504 invoice. If there are numbers available, you can identify which invoice have been recorded into the daybook and which invoice is missed into accounting records. Mean the invoice number must be mentioned against each accounting entry. What are the controls over receivable ledger? Receivable ledger must be reconciled with the control account on regular basis, on monthly basis to identify any posting errors. Receivable ledger must be reconciled with control account. It must be reconciled with control account. Why? To identify any posting errors. And second, the most important control over receivable ledger must have aged analysis performed. What does that mean? Receivable ledger must have aged analysis performed. What is mean by aged analysis? One person from the company should perform aged analysis on the receivable. Aged analysis means checking the days for the amount overdue. Against each receivable, you need to make sure up to how many days this amount is overdue. If you have a policy, we can allow 30 days to the customer credit period. And if any of the receivable balance is due more than 30 days, this means we need to trace him for recovery of amount. If we do not trace him because we are not aware his balance is overdue, so there could be chances of bad debts. So to reduce the chances of bad debts, each receivable ledger must have aged analysis performed. So if that balance is overdue from their period, we must give a notice to the customer. We should trace to the customer, please pay the amount. If you don't trace because you are not aware balance is overdue, there are chances of bad debts. So these are the controls relating to each level of sales. Now we are discussing about what could be the control over receipt. While receiving cash, there should be two persons present. If is one person, he can misuse the receipt. To avoid misuse of the receipt, there should be two persons present, one receiving cash and one is recording. Receipt should be recorded in daily receipt list. So that you can identify how much receipt we have received during the day. And receipt should be updated to cash book and ledgers. So there must be 2% present while receiving cash. Should be recorded in daily receipt list and receipt should be updated to cash book and ledgers. Receipt should be promptly banked. Promptly banked means whatever you have received should be deposited into the bank on a quickly basis. Otherwise, there will be chances of misuse of cash. There will be chances of theft of cash if you keep the cash in the company. So should be promptly banked. Which receipt have been deposited into bank and which is not deposited into bank? For that purpose, you need to compare daily receipt list with the paying in slip mean deposit slips. Whether this receipt has been deposited into bank, this receipt has been deposited into bank. So this you can identify if any receipt is not deposited into bank, why it is not deposited into bank, where is that? Company is having or it's misused, gone through theft. So while receiving, there should be two persons. Should be recorded into daily receipt list. Should be promptly banked. Cash book ledger must be updated. And the daily receipt list and paying in book should be reconciled. And company need to reconcile cash book with bank statement, mean perform bank reconciliation, so that if there is any differences, unpresented, uncredited checks, that could be investigated. Paying in book, when you deposit cash into the bank, you are taking one deposit slip from the bank. That deposit slip you keep into record, and that record will be called paying in book. Mean these payments have been deposited into the bank. Bank ledger was not bank ledger. This is deposit slip book in which you attach all the deposit slips. Have you deposited a cash into the bank ever? Yeah. Nowadays, there are machines. We are depositing the machine. Even if we are depositing the machine is producing a slip. That slip will be called deposit slip. We need to keep that slip in company record because date, time, money, everything is stated over that slip. This is a proof that you have deposited cash into the bank. Who deposited cash into the bank? Any of the person, any of the clerk. So whether he has deposited or not, how you can verify? Where is it? The deposit slip? You need to keep in record so that you can compare these deposit slips with daily receipt list to make sure which receipt have been deposited into bank and which is not deposited. So these are the controls that must have over the sales system that normally work in our company. We haven't started audit yet. We are just becoming familiar about what could be the sales system in a company and what could be the controls over sales system, because without having a knowledge about the system, their control, we will not be able to perform test of control. Because what is the purpose of test of control? To take evidence whether controls are being performed or not. What controls? These are the controls. We should have knowledge about controls. Then we can perform test of control. Meaning we can check these controls whether they are working or not. If we are not aware about controls, we don't need to test because we don't know what are the controls that we need to test. So these are the controls. Against each control, there should be a reason why these controls are there. There could be a reason. That reason will be called control objective. What could be the reason behind checking customer creditworthiness before accepting order? To ensure orders are accepted from creditworthy customers only. To ensure orders are accepted against stock available. To ensure completeness of recording of documents. The reason behind each control will be called control objective. What is the objective of control? What is the reason for control? To ensure goods are dispatched as per orders. To ensure customer have actually received the goods. To ensure completeness of recording of dispatch note. To ensure inventory movement is completely and accurately recorded. Because if there is difference, this means inventory movement is not recorded completely accurately. So we are checking that difference, why there is a difference. To ensure invoices are made against orders. To ensure invoices are made against good dispatch note. To ensure invoices are accurately made. To ensure completeness of recording. To ensure completeness of recording. To ensure there is no posting errors. To ensure bad debts are properly controlled. Why we need to perform age analysis? To control the bad debts, chances of bad debts, to ensure bad debts are properly controlled. Why there should be two persons? To ensure or to prevent misuse of receipt. Why it should be updated to ledgers? To ensure ledgers are updated against receipt. To ensure or to prevent misuse or theft of cash in the company. That's why it should be promptly backed. So the reason behind any control will be called control objective. And sometimes write down objectives. And these controls and their control objectives are written here. So these are the documents, sale order, dispatch note, in PIR, sale invoice, day book, ledger, nominal ledger, receipt list, cash book, paying in book, bank statement. What could be the control objective? The goods are only dispatched to credit-worthy customer. That's why we need to perform customer creditworthiness check while receiving order. There is a proof of receipt of goods by the customer. That's why GDN should be pre-numbered. Oh, sorry, it should be signed by the customer. That invoices are raised only for goods order and dispatch. That's why we need to match invoices with order and dispatch note. Invoices are accurately raised. That's why we need to perform arithmetic check. So these are the purposes against control. And when we are writing purpose or objective, we should start our sentence with to ensure. When we need to write control objective, we should start our sentence with to ensure. While writing controls, we should start our sentence must be, must have, must be, must have, rather than to ensure. Controls mean policies. These should be, these must be, these must have. And these are the controls we have discussed. Now we are moving towards how we can perform test of control. How we can perform test of control. Test of control means to take evidence whether these controls are being performed or not. How we can take this evidence? Through procedures for collecting evidence. Inspection, observation, inquiry, confirmation, compare. These are the procedures we need to perform to take evidence. If we want to check whether sale orders having performed control of creditworthiness, stock availability, and pre-numbered or not, how we can check? We will select a sample. We are discussing about test of control. What we will say, select a sample of purchase orders and test for evidence that customer creditworthiness check performed, stock availability check performed, and are pre-numbered. Select a sample of document and test for evidence. Test for evidence means we are performing test of control to take evidence that controls are being performed. What are controls? Customer creditworthiness check performed, stock availability check performed, and are pre-numbered. What will be the test of control for dispatch note? Select a sample of dispatch note and test for evidence that match with orders having customer signature as a proof and are pre-numbered. What will be the test of control for sale invoice? Select a sample of sale invoices and test for evidence that match with order, match with GDN, having arithmetic check performed, and are pre-numbered. Is that fine? Instead of using word test, we can use the word inspect as well. And inspect for evidence. How we can check PIR is updated against physical count? Because PIR is a register, we cannot take sample. If there are so many documents, we can take sample of those documents. PIR is a register. What we will say? Evidence will be sought. Evidence will be obtained or will be sought. Sought is a good word. How? By physical comparison? No. Physical comparison of what? We can inquire from warehouse staff. by inquiry that PIR is updated against physical count, or we can evidence sort by observation. Mean when they are performing physical count, we can observe the system how they are counting the inventory, and after counting, they are updating PIR or not by matching the quantity counted with PIR register. So evidence will be sought by inquiry, by observation, that control is being performed or not. What is control? PIR is updated against physical count. How we can check whether receivable ledgers have performed aged analysis? Evidence will be sought by inquiry. Aged analysis has been performed on receivable ledger, and then we'll make further inquiry. Okay, if you found any overdue debtors, what you have done then? They will say we have sent them a letter, we have chased them to recover the amounts. This means control is working properly. How we can make sure there are 2% present? No. Client company have to perform controls. Company have controls, not auditor have control. Auditor need to check whether these controls in company working or not. If these controls are working, this means controls are effective. This means financial statements produced from this system is true and fair. If controls are not working, there are chances of fraud and errors. In financial statements are not true. How we can make sure there are 2% present while receiving cash? Evidence will be sought by observation. Evidence will be sought by observation that 2% present while receiving cash. Evidence will be sought by inspection that receipt are recorded in daily receipt list. What will we inspect? Daily receipt list. Evidence will be sought by comparing daily receipt with cash book that ledgers are updated against receipt. Evidence will be sought by comparing daily receipt with list with deposit slips to make sure receipts are promptly banked. Is that? We have discussed about sales system, its controls, and we have discussed about how to perform test of control. I mean, whatever the controls are there, we need to test. How we can test? If there are documents, we can select a document and test for evidence. Control. If there are no documents, I mean, we cannot take sample. In that case, we will use the wording evidence will be sought by inspection, either observation, either inquiry that control is being performed. This wording is very, very, very important. What the problem students are facing in the exam is the wording. Examiner asked to write control objective. This means reason behind the control should always start to ensure. If examiner asks about control, must have these. What students are doing, instead of control objective, they are stating controls. Instead of control, they are stating control objective. He's asking for test of controls. Students are mentioning control objective. This wording is very important. This will either fail or pass your paper. And there will be a must question about any of the account balance auditing. Okay, we have discussed how to perform test of control. Now we are going how to perform substantive procedure. Substantive procedure. What is meant by substantive procedure? Substantive procedure, what is meant by substantive procedure? These are tests on account balances and transactions to verify they are complete, valid, and accurate. To verify whether this amount is accurate, valid, and complete or not. In simple words, substantive procedure means to verify financial statement assertions. They can ask, but you don't need to write. Yeah, they can ask to write down definition, or they can ask in MCQs. So the purpose of substantive procedure is to verify financial statement assertions about account balances and transactions. Sale is income statement item or balance sheet item? Income statement item. This means while performing substantive procedure on sale, we need to verify financial statement assertions. What are the assertions relating to sales that we normally verify occurrence? Completeness and cutoff. So these are the three important assertions that we normally verify for sale figure. What does it mean by occurrence? That the sale written here is actually occurred. It is not fictitious, it is not duplicated, it is not overstated. How we can check that sale actually occurred? We will compare this sale to sale day book or invoices. If against this sale there are invoices, this means this sale actually occurred. It's not fictitious, it's not fake, it's not double, it's not duplicated. If there are no invoices, sale is either fictitious, fake, double, or duplicated. But invoices could be raised fake. Then what we will do? We will compare invoices with the GDNs, whether there are goods dispatched. GDNs could be made fake. We will compare GDN with orders as well as inventory records. And if there are these corresponding things behind this sale, this means this sale has actually occurred. It is not fictitious, not overstated, not duplicated. If there is anything missing, mismatching behind, it could be fake. So to verify occurrence of sales, what we will write for different procedures. To verify occurrence of sales, we need to write 4 different procedures. How we will write the wording? Occurrence. Trace a sample of from where sale records or sale ledgers. From sale ledger, we'll take a sample of different sale records to relevant sales invoices and agreed detail. Detail means name, date, quantity, amount. Why? This is to ensure sales are supported by invoices. Mean they are not written without invoices. There are relevant invoices behind it. Means it is not fictitious or fake record. This is to ensure sales are supported by invoices. But invoices could be fake. Then what we will do? Trace a sample of sales invoices to relevant, could be behind invoices, dispatch, leave the daybook. We can record entries directly in ledger as well without having daybook. So what is behind the sales invoices? GDNs. To relevant GDNs and agreed in the same amount quantity date. Why? This is to ensure invoices are raised against dispatch. This is to ensure invoices are raised against.
How do you decide how much to trace? How do you say how much to trace? Every line and what will say?
Yeah, every time they start from sale, backward every document. Please a lot. Just give me a minute. My system struck again. Mr. System. Need to work. Please behave nicely. So to ensure invoices are raised against goods dispatch. Then what we will do? Trace a sample of dispatch note. In GDNs to relevant part. Sale orders and agree detail. This is to ensure what GDNs raised are supported by invoices are GDNs raised against accounts. They are not teachers, they are orders. And we need to trace some GDNs to PIR as well. So trace a sample of GDNs to relevant PIR records in agree detail. This is to ensure inventory movement is recorded against GDNs. I mean, they are not fictitious. There is inventory record as well. In inventory actually have gone of business. So these are the four substantive procedures to derive, verify occurrence of sale. We will start tracing from sales to relevant previous sale invoices and agree detail. Why? To make sure sale is supported by invoices. Then we will start invoices to back relevant GDNs Agri detail, this is to ensure invoices are made against GDNs, not fictitious. I mean, there are GDNs. And then from GDNs to order and GDNs to PIR. So these are the four procedures that will write to verify occurrence of sales. Instead of word trace, you can use the word inspect as well. In somewhere you can use trace, somewhere you can use inspect. Or you can use the word compare as well. Compare a sample of GDNs to relevant sale orders and agree the detail. Or even you can use the word reconcile as well. Compare, reconcile, same thing. Is that fine? Either you can word use trace, either inspect, compare, reconcile. So that the examiner doesn't have doubt like you are just putting cramming. You know? Okay, we have discussed how to verify occurrence. Now, how to verify completeness. What is meant by completeness? That sale is completely recorded. There is no understatement. There is no omission of sales. Sale is completely recorded. There is no understatement. There is no omission of sale. How we can verify this? In occurrence, we have performed backward matching. For completeness, we will perform the forward matching. From where? From the initiating document. Trace a sample of sale orders to relevant dispatch note and agree detail. This is to ensure sale order have been converted into dispatches. Trace a sample of GDNs to relevant sales invoices and agree detail. This is to ensure dispatches have converted into invoices. Then trace a sample of dispatch note to relevant PIR records. This is to ensure inventory movement is completely recorded against dispatches. Because we are checking completeness, so we will say this is to ensure inventory movement is completely recorded against dispatches. What would be the last? Trace a sample of sale invoices to relevant sale ledger balances and agree detail. This is to ensure all invoices have been completely recorded into ledgers because we are checking completeness. This is to ensure all sale invoices have been completely recorded into ledgers.
GDL, read to invoice.
Should I repeat it again? First, trace a sample of sale orders to relevant GDNs and agree detail. This is to ensure all orders have converted into dispatches. Second, trace a sample of GDNs to relevant sales invoices and agree detail. This is to ensure all GDNs have converted into invoices. Third, GDN to PIR. Trace a sample of GDNs to relevant PIR records. This is to ensure inventory movement is completely recorded against dispatches. And fourth, trace a sample of dispatch note, sale invoices to sale ledger balances. Trace a sample of sale invoices to sale ledger balances and agree detail. This is to ensure all invoices have been completely recorded into ledgers. All invoices have been completely recorded into ledgers. So wording is the same. For occurrence, we need to perform backward matching. And for completeness, we need to perform forward matching. From where? From the start document till sale ledger. So there could be 4 procedures, substantive procedure to verify completeness as well. Is that fine? Now we are going to discuss how to check cut-off assertion. How to check cut-off assertion. What is meant by cut-off? That transactions recorded in their correct period or not. Suppose company year end is 31st December 2023. When this year has started 1st of January 2023. This means if we are preparing financial statements, all the accounting entries from this date to this date should be recorded in the financial statements. This means sale from 1st January till 31st December should be recorded in the financial statement. But what happens sometimes management record sale of next January to December. Or mistakenly they record January's December sales to January. How? Suppose company have received order from the customer on 28th of December. They dispatch goods on 3rd of January. Where sale should be recorded either in January or December. January, because the risk and reward has been out from your possession in January. Though you have received payment in December, this sale is of January when you deliver the goods. This means we need to make sure which date is the dispatch note. The sale must be recorded in that period. Dispatch note is of December, mean current period. Sale must be recorded in current period. If dispatch note is of next period, sale should be recorded in next period. And for that purpose, we will trace a sample of dispatch notes of December, match with the sale invoices and ledger balances to make sure sale is recorded in December. And then we will trace a sample of a dispatch note of January, match with their invoices and ledger balances to make sure sale is recorded in January. And where this cut-off errors happen normally in last week or last 10 days of the current period, mean December, or first week or first 10 days of the next period, mean January, mean here normally cut-off errors happen. So what we will write about verifying cut-off. Trace a sample of GDNs raised in last week or last 10 days of December. Last week of December, instead of December, we can use current period. Mean December last week. True relevant invoices and ledger balances. This is to ensure sales and receivables have been recorded in current period only. So trace a sample of dispatch notes raised in the last week of current period, mean December last week dispatch notes. We have traced relevant invoices and ledger balances just to make sure sale and receivable should be recorded in current period only rather than next period. And then what we will do, trace a sample of GDNs raised in first week of next period.
Order.
Now, where sale should be recorded as per dispatch note.
Yeah, but
Which period dispatch note sale should be recorded in that period.
if the it puts the sales.
Invoices doesn't matter. Dispatch note is of 28th December. You send the invoice on 10th of January.
He puts the sales order.
Now, sale should be recorded as per dispatch note when you have delivered the goods, not as per the order. That's why we are tracing sample from where dispatch note and matching to their relevant invoices and ledger balances to make sure if the dispatch note is of December, sale should be recorded in December ledger, not according to order.
And I'm gonna asking, and if by mistake we have.
That's why we are checking the dispatch note of last week of December as well as first week of next period. They shouldn't be recorded even in current period. Because if order is of December and they have recorded in December, no. If dispatch note is of January, they should be recorded in January. Is what we are saying. Trace a sample of GDN raised in the first week of next period. Two relevant invoices and ledger balances and agree detail. This is to ensure what? Sales and receivables have been recorded where in the next period only, because these are not relating to current period. Is that fine? One more procedure. Trace a sample of credit notes issued immediately after year end. Two relevant invoices and ledger balances. This is to ensure sale returns have been adjusted in their correct period. What happens if company has made a sale in December? In January, customer return the goods. Where the sale return should be adjusted in December or January. If you will adjust in January, the current year sale will be overstated. So this should be adjusted against December sale. And against sale return, company issue a document called credit note. So what we are going to do, we have taken a sample of credit note issued immediately after the year end, meaning in January. And we have checked where is the invoice and a ledger, mean where the sale is recorded against this. to make sure sale return have been adjusted in that period on. If the sale against it recorded in December, the sale return should be adjusted in December sale. If you are adjusting the sale return in January, then for the current year sale will be overstated. So these are the three procedures to verify cutoff assertions. We have learned 11 substantive procedures regarding sales. 4 to verify occurrence, backward matching, 4 to verify completeness, forward matching, and 3 to verify cutoff assertion. And sometimes examiner asks for 5 marks. Write down 5 substantive procedure to verify sales revenue. Any of the 5 we can write down, 2 for occurrence, 2 for completeness, 1 for cutoff. Sometimes he says for 5 marks, write down substantive procedure to verify completeness and a cutoff of sale. Then we need to write down completeness and cutoff only. Take a break. After break, we will discuss about purchase system and how to verify purchase system. So sales system we have discussed. What are the documents prepared in that system? What could be the controls in that system? The reason behind controls, control objectives, how to perform test of control, and we have learned how to perform substantive procedure to verify different assertions occurrence, completeness, and cutoff. Let's move towards purchase system. What could be the purchase system? What documents prepared in purchase system? How purchases should be recorded? So similar to sales system, only the name will be changed according to purchase system. When company order goods to supplier, company generate a document called purchase order. When company received the goods, there will be a document coming with the goods, that is dispatch note from supplier. For us, this will be called delivery note, or we will call it GRN, good received note. Against good received note, we will record inventory movement where PIR. Then there should be a document called purchase invoice. It's missing in this. Against purchase invoice, we will record accounting entry in purchase day book. What is the accounting entry? Purchases. Purchase debit, payable credit. So we'll update the payable ledgers of all suppliers, and we will update in-person ledgers of purchase account, VAT account, and combined account of all suppliers, mean payables control account. So instead of sale order, there will be purchase order. Instead of GDN, there will be GRN, good received note. PIR will remain same. Instead of sale invoice, there will be purchase invoice. Instead of sale day book, we will record in purchase day book. And payable purchases ledger will be updated. And then we will make a payment. And against payment, we will update the cash book as well as ledger. This payment will be made to supplier. And if we are paying to supplier through a check, when he will withdraw from our bank account, our bank statement will be updated. Sale order have been converted into purchase order, GDN into GRN, sale invoice, purchase invoice, sale day book, purchase day book, receivable ledger, payable ledger, sale purchase. Instead of receipt, there is payment, and against payment, cash book ledger will be updated. But there will be one more document before order that will be called purchase requisition. What is purchase requisition? Authorization or approval for purchase. Authorization or approval for purchase from departmental head, internal from company point of view. Mean before placing order, there should be approval for purchase so that ordering department cannot buy goods for their personal use. So that unnecessary buying can be stopped. Because if company making unnecessary buying, liabilities will not be controlled. There could be fraudulent ordering, like ordering department can make order for their personal use goods. So all the orders should be placed as per purchase requisition, mean authorization, approval for purchase. Who should authorize? Any senior person like departmental head, management level person. So these are the documents that normally generated in our purchase system. Now we should know about controls. So let's discuss what could be the controls in that system. Purchase requisition. must be signed by top management or departmental head. Without signature, purchase or acquisition is a fake. Must have signature of top management. And this document we're gonna keep in record. So to ensure completeness of recording, this should be pre-numbered. To ensure completeness of recording, this document should be pre-numbered. Purchase order. There are certain controls while placing purchase orders. Number one, tendering process should be followed. What is tendering process? Before placing order, company should obtain quotation from approved suppliers. And we will see which supplier is selling best quality at the lowest price. Company should place order to that supplier. Mean tendering process mean obtain quotation from approved suppliers. Mean company should prepare a list of approved suppliers. Mean company can buy only from these suppliers. And while purchasing, you should obtain quotation from all the approved suppliers. And then considering who is selling high quality at low price, company should order to that. And then while ordering, there should be authority levels and limits established. Like up to what amount maximum ordering department can make order by themselves. And above that amount, there should be approval of, say, finance director. Because he will see whether companies are having that much finance available or not. Because if they are placing big order without checking finance, company will be in trouble while making payment. So there should be authority levels and limits established while making order. Mean above a certain limit or amount, finance director approval should be required. And this document we're gonna keep in record. So should be pre-numbered, i.e. sequentially numbered for completeness. Is that fine? GRN. When you are receiving goods, you should match GRN with the order to make sure the goods we are going to receive is as per order, not more than that, not less than that. While receiving a good, company should perform a quantity check. What does it mean by quantity check? You need to count the inventory that you are receiving and then match that quantity to the delivery note GRN. Mean note is having the same number of units that you are receiving. Suppose note is saying 100 units and the delivery boy have delivered you 96 units and you didn't check that while accepting. That 4 unit loss you need to bear afterward. You cannot claim, oh, I received 96. No, that you can check while receiving, not after that. So while receiving goods, you have to match the GRN with the order to make sure we have ordered exactly that quantity. And you need to perform not only quantity check, you need to perform quality check as well. We check that the unit we are receiving are not damaged. Because if the delivery boy has delivered you damaged goods, you need to bear this damaged quantity loss afterward. You will not be able to return. If they are damaged, don't accept that. Return to delivery guy, take it back. Because this might be damaged by delivery boy during delivery. If you haven't performed the quality check, so you will be bearing damaged inventory losses. And this document we're gonna keep in record. So should be pre-numbered to ensure completeness of recording. So purchase and acquisition should be signed by top management and must be pre-numbered. Order must be processed through obtaining quotation from approved suppliers by considering best quality, low price. Order must be processed according to authority levels and limits. And purchase order must be pre-numbered. GRN must be matched with orders, must have quantity check performed, must have quality check performed, and must be pre-numbered. And for invoice, the similar controls, what? Matching with order. For pricing check, the discount, the price per unit we agreed while making order, supplier is charging that discount, that price must be matched with the GRN. For quantity check, like the quantity we have received, supplier is charging that quantity, not more than that. Must have arithmetic check performed. For accuracy, and must be pre-numbered to ensure completeness of recording. PIR will be having the same control. What must be updated against physical count? I mean, on monthly basis, company should count the inventory in warehouse and compare that counted quantity with the register. And to make sure if there is any difference, you need to update the register. Daybook is having the same control, pre-numbered. Meanwhile, recording accounting entry for purchases, the purchase invoice number must be mentioned as in reference column against entry so that we can make sure all invoices has been recorded into general account. Payable ledger must be reconciled with the control account. To identify posting errors. And payable ledger must be reconciled with supplier statement. Every month end, your supplier send you his statement. This is a detail like at the start of the month, this was your balance. During the month, these were the purchases, these were the payments, these were the purchase return. This is your ending balance. You have to compare that supplier statement that is coming from supplier with its ledger, whether our accounts is showing similar amount or not. If our account is showing different amount, we need to investigate and adjust either in supplier ledger, either in our ledger. For payment, two signatories authorize the payment. Two signatories authorize the payment, like chief accountant should approve and then accountant sign the check and make payment. Because if there is one person, he can misuse the payment into his personal account as well. While making a payment, supporting document should be checked. What could be the supporting document against which you are making payment? Means invoice. So you need to check the invoice, or you need to cross cancel mark the invoice so that it should not come for payment again. Not only you are checking payment are genuine, you are also marking the invoice so that it should not come for payment again. To whom we are paying? To supplier. If we are paying through check, he will withdraw from our bank account. Our bank statement will be updated. Then what we need to do? We need to compare cash book and bank statement reconciliation to identify differences. And you can say against a payment, cash book ledger can be updated.
Yes, supporting support documents.
Supporting document mean invoice. Not only check, you need to mark it cross cancel. So cash book and ledger must be updated against payment. So these are the controls over purchase system. Purchase acquisition must be signed by departmental head and must be pre-numbered for completeness of recording. Purchase order should be processed through tendering process, mean by obtaining quotation from approved suppliers, and must be made according to authority levels and limits, and purchase order must be pre-numbered. GRN must be matched with orders, must have quantity check performed, must have quality check performed, and must be pre-numbered. Purchase invoice must be matched with orders for pricing check, must be matched with GRN for quantity check, and must have arithmetic check performed for accuracy, and must be pre-numbered. PIR must be updated against physical count. Payable ledger must be reconciled with the control account for identify posting errors and must be reconciled with supplier statement. Two signatories must authorize the payment. While making payment, supporting document must be checked, crossed, cancelled, and against payment, cash book ledger must be updated. Why these controls should be there? There could be some reasons called control objective. Why purchase action should be signed by top management? To ensure that requisitions are properly authorized. Why tendering process should be followed? To ensure that orders are made by considering best quality and low price. Why there should be authority levels and limits established? To ensure that orders are made according to authority limits. Why GRN should be matched with orders? To ensure that good received against orders. Why there should be quantity check? To ensure that correct quantity has been received. Why there should be quality check? To ensure that damaged units are not being received. Why there should be invoices matched with orders? To ensure that invoices are made against orders. To ensure that invoices are made against goods received. To ensure that invoices are accurately made. To ensure that invoices are completely recorded. Why PIR must be updated against physical count? To ensure that inventory movement is completely accurately recorded. Why you need to reconcile payable ledger with the supplier statement? To ensure that company is having correct balance of supplier. The reason behind controls will be called control objectives, and these are written here to ensure that liabilities to which the company is committed are properly controlled. That's why purchase requisition should be authorized, signed. They will check these things are necessary, then they will issue purchase requisition. If orders are being made without requisition, liabilities will not be controlled because unnecessary goods are being bought.
You some questions on the
You're gonna see them. You're gonna see it. How to perform test of control. Select a sample of purchase requisition and test for evidence that it is assigned by top management and are pre-numbered. Select a sample of purchase order and test for evidence that process through tendering made according to authority level limits and are pre-numbered. Select a sample of GRN and test for evidence that they are matched with orders, quantity check performed, quality check performed, and are pre-numbered. Or we can say observe the warehouse while receiving goods, quantity check performed, quality check performed. Mean evidence will be sought by observation in warehouse while receiving goods, quantity check performed, quality check performed. Select a sample of purchase invoices and test for evidence they are matched with orders, matched with GRNs, having arithmetic check performed and are pre-numbered. Evidence will be sought by inquiry that PIR is updated against physical count. Evidence will be sought by inquiry that supplier statements have been reconciled with supplier ledger. Evidence will be sought by observation that two signatories authorizing the payment. Evidence will be sought by comparing payments with the supporting document. That supporting document is crossed, cancelled, checked. It must be any sign or cross over the invoice. Evidence will be sought by inspection that ledgers have been updated against payments. Purchase is also an income statement item. For that, we need to perform a substantive procedure to verify three assertions: occurrence, completeness, cutoff. For occurrence, we need to perform backward matching. For completeness, we need to perform forward matching, and for cutoff, we need to perform forward matching from the note. Occurrence means if purchase is recorded here, we need to make sure it is occurred, not fictitious, not overstated, not duplicated. So trace a sample of purchase ledger balances to relevant invoices and agree detail. This is to ensure purchases are supported by invoices. Trace a sample of purchase invoices to relevant GRNs and agree detail. This is to ensure invoices are raised against goods received. Trace a sample of GRNs to relevant purchase orders and agree detail. This is to ensure GRNs raised against orders. Trace a sample of GRNs to relevant PIR records. This is to ensure inventory movement is recorded against GRNs. Then trace a sample of purchase orders to relevant purchase requisition and agree detail. This is to ensure orders are made against requisition. How many substantive procedure? 5. For sale, there were 4. Why? There was not a purchase requisition over there. So there is an additional document. Trace a sample of purchase ledger balances. Trace a sample of first, trace a sample of purchase ledger balances. to relevant purchase invoices and agree detail. Why? This is to ensure purchases are supported by invoices, mean not fictitious, not overstated, not fake, not duplicate. Can you understand this? Second, trace a sample of purchase invoices to relevant GRNs and agree detail. This is to ensure invoices are raised against GRNs, mean not fake. Third, trace a sample of GRNs to relevant purchase orders and agree detail. This is to ensure GRNs made against orders, mean not fake. Trace a sample of GRNs to relevant PIR records. This is to ensure inventory movement is recorded against GRNs, mean GRNs not fake. Goods have actually received. Then trace a sample of purchase orders to relevant purchase requisition and agree details. This is to ensure orders made against requisitions, mean not fake. Can you understand this? Next, for completeness, forward matching. From where? Start documenting. Trace a sample of purchase requisition to relevant purchase orders and agree detail. This is to ensure requisition have converted into orders. Requisition have converted into orders. Second, trace a sample of purchase orders to GRNs and agree detail. This is to ensure orders have converted into GRNs. And third, GRN to invoices. Fourth, GRN to PIR. And fifth, invoices to purchase ledger balances. Write down these questions. Any confusion in writing 5 substantive procedure to verify occurrence of purchase and 5 substantive procedure to verify completeness of purchase? Any confusion, please? Please tell me any confusion so that I can shoot you. There shouldn't be any confusion. Same like says, the wording is the same, only the name of documents are going to change. For occurrence, backward matching, where from ledger backward to invoice, note, order, TIR. And for Completeness, forward matching from the start document towards the ledger. Now moving towards cutoff. For cutoff, we will write the procedures. Number one, trace a sample of what? GRNs raised in the last week of current period, mean last week of December. Two relevant invoices and ledger balances. Why? This is to ensure purchases and payables are recorded where? In current period only, not to next period. That normally management wants. Then trace a sample of GRNs raised in the first week of next period, mean January first week. Two relevant invoices and ledger balances. Why? This is to ensure purchases and payables are recorded in the next period only. Against sale, company issue credit note. Against purchases, what do they issue? Capital. So trace a sample of debit note issued. Where? Immediately before and after year end. Immediately before and after year end. Two relevant invoices and ledger balances. Why? This is to ensure purchase return have been adjusted in their correct period. If they are relating to December, they should be adjusted in December. If they are relating to January, they should be adjusted in January. December. Is that fine? There are 5 plus 5, 10 plus 3, 13 substantive procedure to verify purchases. 5 for recurrence, 5 for completeness, and 3 for cutoff. Is that fine? Now we should move towards questions. You know? Okay. What does it mean by occurrence and completeness? If we talk about purchase occurrence means that each recorded purchase refer to an actual valid purchase in the period. And it's not fake, it's not fictitious. No duplicated purchases recorded. Purchase recorded if goods were not received. No purchase recorded if goods were not received. No fictitious purchase recorded. Purchase recorded were genuine purchase of the business, not personal transaction of staff, and there is no cut-off errors. While completeness means no cut-off errors occurred, all purchases prior to the year end have been recorded as purchase in the year. And what we need to do for testing occurrence, the sample will be chosen from recorded purchases in the nominal ledger and trace backward through the system to ensure there are spotted invoices, receipt, GRN, entry into inventory record, originating purchase order, and purchase requisition, mean backward matching. And for completeness, we will trace sample from originating purchase requisition and trace forward through the system to ensure that there is purchase order, entry into PIR, purchase invoice, and entry into ledgers. And occurrence, this proves the validity of the recorded purchase and is test for possibility of overstatement of purchase. In purchases are not overstated. Completeness is a test for possibility of understatement, mean purchases are not understated. Is that fine? Let's move towards a good question on purchases. On purchases. Question 20. There is a requirement. List the substantive audit procedure you should perform to confirm the assertion of completeness and occurrence for purchases in the financial statement of Vestra company. And for each procedure, explain the purpose of that procedure. While writing substantive procedure, we have written the purpose. This is to ensure purchases are spotted by invoices. Invoices are raised as per goods received. So we need to write down substantive procedure to verify completeness and occurrence. We can write down straightforward. But if there is a scenario, we need to read the scenario. Might be they have changed the name of any document. In that case, we need to use that name rather than our name. Okay, we need to find purchase system from this scenario. Vestra company assemble mobile telephone in large factory. Each telephone contain up to 100 different parts, with each part being obtained from one of 50 authorized suppliers. I mean, there are 50 authorized suppliers to whom company made order. Like many companies, Vestra accounting system are partially manual and partially computerized. In overview, the system include design software, computerized database of supplier, manual system for recording goods inward, computer payable ledger maintained, and online payment to suppliers. But we need sequence of document. Mobile phones are assembled in batches of 1,000 to 10,000 to 50,000 telephones. When a batch is scheduled for production, A list of parts is produced by the design software and sent electronically to the ordering department. Before making order, what ordering department receive? Purchase requisition. They have changed the name of purchase requisition as a list of parts. Staff in the ordering department use this list to place order with authorized suppliers. Orders can only be sent to suppliers on the supplier database, and orders are sent using electronic data interchange and confirmed by each supplier using the same system. Mean after this, they are placing purchase orders, and purchase orders are placed to whom? Purchase orders are placed to authorized suppliers. How they are placing purchase orders through EDI, and supplier is confirming that they have received the order. Okay. Orders are sent using electronic data interchange and by it is EDI, a computerized system through which they place order like any communication system. Like WhatsApp, they are sending order and they are confirming through that system, communication system, okay, your order is accepted. And confirmed by each supplier using the same system. There are list of parts mean requisition, and orders are maintained on the computer in an order placed file, which is kept in a date sequence. Mean these things they are placing in an order placed file. Mean there is order placed file, mean where these two things are kept as record in order placed file. So that while comparing list of parts to purchase order, what we will say, trace a sample of list of parts from order placed file to relevant purchase orders. We will use where from we need to trace. So trace a sample of list of parts from order placed file to relevant purchase orders and agree detail. This is to ensure all requisition or list of parts have converted into orders completeness. First procedure. We will use the wording of scenario along with our cramming procedure. We need to change our cramming a little bit according to the scenario. The way of expression will be same, but we need to change a little bit according to the scenario. Okay, what happened next? Parts are delivered to the goods inward department at Vestra. All deliveries are checked against the orders placed file before being accepted. Mean delivery note is matching with order placed file. Why? Because purchase orders are there. A handwritten pre-numbered goods received note GRN. It's not ORN. GRN is erased. Mean after that, what is happening? There is GRNs. No, it's GRN. It's mistake. Typing mistake. I know it's my mistake because I prepared the notes. So goods inward department showing details of the goods received with a cross reference to the date of the order. The top copy of GRN sent to the accounts department and the second copy retained in the goods inward department mean warehouse. Why we're sending to accounts department? So that when they will receive invoice, they will compare with GRN. The order placed file is updated with GRN. Mean this against this order, we have received the goods. They are updating the order placed file by comparing GRN with orders. to show that the parts have been received. What happened next? Paper invoices are sent by all supplier following dispatch of goods. Mean after that, what is coming? Purchase invoice.
Invoice.
Invoices are sent to the accounts department because they need to make payment, where they are stamped with a unique ascending number, means sequential number. Details are matched to GRN. They are matching with GRN controls, which is then attached to the invoice. Invoice details are then entered into the computerized payable ledger. Mean after that, they are entering into payable ledger. Not only payable ledger, obviously we will record purchase account as well. We will make double entry, purchases, debit, payable, credit. There shouldn't be any single. Okay, invoices details are then entered to computerized payable ledger. The invoice is assigned by the accounts clerk to confirm entry into the payable ledger. Invoices are then retained in temporary file in a number order while awaiting payments. After 30 days, the payable ledger automatically generate a computerized list of payment to be made, which is sent electronically to chief accountant. The chief accountant compares this list to the invoice, sign each invoice to indicate approval for payment, and then forward the electronic payment list to the accounts assistant. The assistant uses online banking to pay the supplier to its signatories authorizing the payment. And the electronic payment list is filed in month order on the computer. Mean after this, what is going to happen? Come on.
Personal purchase day book or?
Without purchase day book, we can record into ledger directly. Even purchase day book we didn't use in our occurrence or completeness substantive procedure. That is not mandatory. That is not necessary. So after this, they are making payments. After this, they are making payment. But what we need sequence of documents. For occurrence, what we will do? Trace a sample of purchase ledger balances to relevant invoices and agree detail. This is to ensure purchases are supported by invoices. Trace a sample of purchase invoices to relevant GRNs and agree detail. This is to ensure invoices are raised against good received or GRNs. Trace a sample of GRNs to relevant purchase orders and agree detail. This is to ensure GRNs are raised against orders. Trace a sample of purchase orders from order placed file to relevant list of parts. Trace a sample of purchase orders from where orders are placed in order placed file, from order placed file to relevant list of parts. And agree detail, this is to ensure orders are made against requisition.
There's no PIR.
There is no PIR, but we can make fifth. Trace a sample of purchase order to relevant supplier list, authorized supplier list. And agree detail, this is to ensure orders are placed to authorized suppliers.
PIR is probably good.
If this PIR is not there, we can write 4 procedure, no issue with that. We can write 4 procedure. For completeness, forward matching. Trace a sample of list of parts from order placed file to purchase orders and agree detail. This is to ensure list of parts have converted into orders. Trace a sample of purchase orders to relevant GRNs and agree detail. This is to ensure all orders have been converted into goods received. Purpose mean we need to write down English. In why you are tracing from here to here. What is the purpose? Trace a sample of GRNs to relevant purchase invoices and agree the detail. This is to ensure GRNs have been converted into invoices. Trace a sample of purchase invoices to relevant payable purchases ledger balances. This is to ensure all invoices have been recorded into ledgers completely. Simple. There was a big scenario just to confuse. Oh, what will happen here? What's the answer? The same. Cramming of occurrence, completeness, cutoff procedures. Yeah. Fine. What is the purpose? This is to ensure, this is to ensure, this is the purpose that we are writing for, tracing from here to here. Let's move forward. Okay, now moving towards kit questions. That's enough for today. It's fine, but we don't have paper tomorrow, innit? We have so many days left. So enough for today. It's fine for today. In next lecture, we will cover some good questions on the sales system, purchase system. And then we will move towards payable system. So that's enough for today. When we will finish the course?
Yeah.
1 day before your exam. Trying to complete till end of February. That's why you have to revise by yourself during this February. Because I'm trying to cover more and more practice questions, Without question, I can complete syllabus in next 2 classes. But I'm trying, we should cover properly with practice question.
How many points is that?
How many?
Points is that? The one you answered?
The answers are available in these notes.
How many marks?
How many marks? Say 10 marks. And this requirement is missing cutoff as well. There was a requirement of cutoff as well. So you can write 10 points for 10 marks.
Sir, most of the questions to answer.
Small paragraphs. Though I am making bullets, but this is not a bullet. If you write, it will be 3-4 lines, small paragraph. In at least 2 lines, 2.5 lines. Not too short, like just half line. In bullet points, but if you see the length of that point is a small paragraph.
It's a paragraph.
Yeah, it's a paragraph. Just you are marking the paragraph with a dash. So that doesn't mean it's a bullet point.
Okay.
Because this paper, 100 marks for 100 valid points. 100 marks, 100 valid points. If there is any MCQ, obviously that there will be 1 mark, 1 point. If you need to write answer for 5 marks, you need to write 5 small paragraph. If there is a 10 marks question, you need to write down answer in 10 small points, mean paragraph. And that is not a bullet, that is not detailed paragraph, that is summarized short 2 to 3 lines point. So see you next
Thank you.
on our routine Tuesday class.